It's just money. It's made up. Pieces of paper with pictures on it so we don't have to kill each other just to get something to eat. It's not wrong, and it's certainly no different today than it's ever been. 1901, 07, 29, 1937, 1974, 1987, Jesus, 92, 97, 2000, and whatever we want to call this. It's all just the same thing over and over. We can't help ourselves. We just react. And we make a lot of money if we get it right.
Welcome to Market Makers, everyone. Your home for tomorrow's TA today. What a market. Guys, this video, we're going to cover the markets, the Mag 7 plus one, because that's 40% of the gains in the S&P. We're going to cover those stocks individually. Everything will be timestamped below. My next video coming out just after this video will be on the crypto market. And then there's a special video, a third video on the metals, because there's a key pivot point coming up towards the end of October in the metals. I want you guys to be aware of it. So 3 videos today. If you like them, be sure to give them a thumbs up, subscribe to the channel. If you want to join and get our premium content throughout the week that you can watch right there on YouTube, click the join button on YouTube. You get all of my TA videos, the staff's videos that we put out, my education system, everything's right there. And you can check out marketmakers.trade if you want to join through our website or watch videos vis-a-vis the website. You can trade these markets on SimpleFX if you live outside the US, a fantastic exchange. That's in the video description. That was a mouthful. Let's jump into the charts. Hope everybody had a good weekend. Let's see where we are. So as you guys know, since Q4 last year, beginning of this year, I've had 2 targets on the S&P based off the CV19 low because I trade off of ratio expansion, ratio contraction. And, you know, ironically, with the February high here down to the April, the tariff derangement sell-off low, the targets are identical. Market symmetry, 7,000 on S&P futures, 7,500 on S&P futures. That's the 2 targets. And you can see where we are now, how we're just kind of grinding, slowly pushing up. Look, at the end of this month, something everybody needs to be aware of, you can sit there and debate. You can spend hours watching YouTubers tell you exactly what's going to happen with Powell at the end of the month, exactly what's going to happen with earnings. But I think at a minimum, understand it's a catalytic event towards the end of the month. We have earnings in the Mag 7. A lot of them, some of them are on the day of the FOMC, right? So some of them are coming out as Powell's talking towards the end of the day, a couple days before. And those 7 companies, plus one, which is Broadcom, are 40% of the gains. Plus we have, is Powell cutting? Is Powell going to cut and be hawkish? Is Powell going to cut and be neutral? All these things matter. How it plays out, we're going to see in the charts. But what I'm confident about is the blow off top. I don't think 7,000 is going to be high enough. I really think that we're going to push somewhere between 7,000 and 7,500. But this slow, steady grind, we need a catalyst to get up, okay? So what I'm thinking is what I've been talking about for a few weeks. Again, it's just my opinion. What I've been looking for is a move up and a pullback back to the downside. Let me just show you what I'm looking at here. This is what I'm looking for. A pullback is 3 to 5%, retracement 6% to 10% typically on the S&P. Just want to show you what this move would be. We hit 6,800 on S&P futures. If we came down to this level, it's just about a 7% move, right? If we came down to this level, the purpose of this is not that it's bearish. It's that's how the market moves. It moves in waves. Wave up, retrace, base, higher wave. Retrace, base, higher wave. That's how a market moves. This is a slingshot move. If you do this move, calm down, base, I think we're going up towards that 7,500. Let me just show you in history how it's played out. Look at S&P futures. Back in April of 2024, March of 2024, spring equinox, 7% pullback. And then what happened? You would go down 7%, you went up 15% in 84 days. Then you got the 11% retracement, right? Then you got the deeper retracement, which again was another slingshot to the upside for the top. So these moves happen, and particularly this same size retracement happened back in 2021 as well. We got a 6%, 6.5% sell-off into October, and then you rallied up for your blow off top going into January 2022, and then you proceeded to sell off bigly, right? You sold off, went down 27% in 2022. This is why it's an important move, and this is how you get that last spring to the upside, and we haven't got that because the market is very euphoric, and it just keeps grinding and grinding higher. We had this little 3.5%er down here, which is just a pullback, and you keep pushing to the upside. So is it possible we just keep escalating up to PAL, to earnings towards the end of October, hit 7,000, then get that type of pullback? So in other words, we come up here. That was a really stupid line. We come up here, do something like this, then get this 6%, 6.5% pullback, then go back up for the blow off, because remember, the S&P ran out to January. It could easily run out to January again. Here we are in the beginning of October. You got plenty of time to get towards that 7,500. I think that's definitely possible. And when we look at this, let me just look at the indicators on a 3-day chart. I mean, look, you're overbought. Your momentum's still strong. Your histogram's waning because the lines are coming together. You got the volume, right? So, I mean, everything is copacetic in that sense. Could you just keep grinding up to 7,000 towards the end of October? You could. It's only a couple hundred points away. But at some point, I think we're going to get this pullback, because this is going to give you the slingshot to the upside, because we still have rest of October, November, December into January. And I don't think you're just going to keep slowly going up. What are we up? 1/3% today, 1/4% down, 0.5% up, 1/3% down. That's not how blow off tops happen. As a matter of fact, blow off tops don't happen when you're barely out of neutral on fear and greed. They're going to happen in extreme greed. Okay. So I expect higher prices. I expect a blow off top, but the question is, do we just grind up this last couple hundred points, or at some point do we get the slingshot 6-7% down, then go up 15, 16, 18%? By the way, if we measure that, looking to that upside here, going up, we go up 15.5%, 7,300. You go up 18%, you're at 7,500. That's after the sell-off. So it's just something I'm watching for, something I'm waiting for, just to see how this develops. We look at the VIX. I mean, you got this nice rounding bottom on the VIX, right? You got a nice rounding bottom, waiting for the RMAs to cross. When these cross historically, without any false signals, get a spike in the VIX, right? Cross, spike in the VIX. You go back further, cross, spike in the VIX. So it's something I'm watching, but the VIX is just flat. I mean, everything's just mediocre. You know, a key thing to understand is that when you're talking about professional money managers, right now, only 20% have beat the market this year. Only 20%. So getting any type of retracement, whether it's from 7,000, whether we just do this, then come back down 6%, then go up, getting this move right here, this allows all the idiots on Wall Street that told you the market was collapsing, and as I was putting out videos, God candle rally coming, V bottom rally coming, right? 50% retracement, boom, bang on, biggest rally, biggest, strongest turnaround rally in stock market history. We're actually up above the 50-day moving average 108 days in a row. 108 days. That's only happened 3 times since 1990, okay? So they all missed this move. 8 out of 10 managers on Wall Street are not beating the market, meaning anybody, your grandmother buying the market on January 1st of this year, doing nothing else, knitting for the rest of the year, she's ahead of 80% of Wall Street. That's not an anomaly. Most of these guys cannot beat the market. It's a big sales pitch to get you to pay them to manage your money. But this gives them that opportunity to buy when it pulls back, okay? I expect the rest of the year to be bullish. The question to me is, do we grind the 7,000 before we get a pullback / small retracement and then the explosive move? That's been my base case, and I've been wrong as we keep grinding, but that's still my base case. That's just what I think is going to happen. As a swing trader, I'm fine with it, just waiting and watching. You look at this on the NASDAQ, it's a similar concept, guys. Look at the NASDAQ, did the same exact thing, right? 8.5% down over here. Spring equinox 2024, 8.5% down. 23% rally, almost a 3x what it retraced to the upside, hence a slingshot. And then what happened? 17.5% retracement. Get these slingshot euphoric moves. So if we look at that over here on the current price action, you take this, go to your price range. Again, we don't know if this is the top here, if it's going to keep grinding up. But if we take the top here, come down 8.5%, what would that slingshot take you to the upside? If to the upside, take our date and price tool here, 8.5%, let's go up 20%. See where we get to. 22, 23% right there. That's where we get to. And just like on the S&P, my targets have replicated vis-a-vis market symmetry with the sell-off from February and the tariff scare. Go down to your low. 25,941 is the 1618, so 26K, and 28.2. Look where that rally takes you. If you want to match it identically, 22%, 22% takes you up to 28.2. So again, I don't know if we just keep grinding up to 26K, then whatever happens with Powell or earnings or some type of scare in the market, then we retrace 8.5%, and then we do that. But we're going to retrace at some point before the blow off because you need to get peak greed in the market. Again, it's just my opinion. I could easily be wrong. That's just how I see the market. And again, this isn't something that we haven't done. We just did it last year. And then we did it on the top for the blow off top for 2021. Remember, Bitcoin, the Russell, NASDAQ all peaked in November. You did the exact same move. You had a strong rally up right into September, sold off here into October, right? Sold off 8.5%, just like you did in 24. And then you rallied up 17% in 50 days. And then you took the massive, massive pull down to the downside. What was this, like 38%, I want to say, to the downside in 2022? 37.5% in 2022. Remember, Bitcoin went down 77%. So again, I'm looking for 2026 to look like 2022, but I think you get this pullback, slingshot, upside. That's what I'm looking at here in the marketplace. Will it happen before Powell, before earnings, or will it happen with Powell, with earnings? That part, I don't know. And as you can see, ratio-wise, we are mid. We're between two levels, so we're going to zoom in. So let's look at the indicator. Canary's overbought. I mean, pretty much everything's going to be overbought. You got a steady uptrend. If we zoom into the 4-hour time frame here in S&P futures, looking at December contract, 67.92 is your resistance, and then above that, 68.38. So I just rounded up 68.50. You have a beautiful W fractal that played out. You want to learn this? Take my education course. W fractal played out. You have your Wyckoff trading range, and what are you doing right now? You're coiling on top of the Wyckoff range, right? You want to take out that fractal high, get a bias to the upside, watch 68.50. If you start losing the support level of 67.50, opens up returning into this range all the way down to 66.24. So you're in a neutral bias in a small time frame, bullish uptrend, but you're in a coil. You have resistance above you at 67.92, 68.50, and you want to hold 67.50. If we look at this on the NASDAQ, exact same thing, right? Money moves through the markets, beautiful W fractal. And then what are you doing? Coiling below the 1272. 25,191. Above that is 25,4. So you need to break out to get to that level. And if you don't break out and you end up making a bearish pattern here, like a double top type pattern, small time frame, large time frame, you want to watch that downside here at 24.9, and that opens up down to 24.4 again, okay? 24,422. So you have a bullish bias to the upside, higher lows all through trend, but you're on top of support and you're just coiling. The coil can resolve up, it can resolve down. That's where you're at. Very neutral. Now let's look at some of the Mag 7. Largest company in the world. There's your trading range, right? Zoomed in. So looking at your trading range, you got on top. I mean, it looks just like the NASDAQ, right? So you got on top of this. This is like a classic Wyckoff coil too. You made your high after your long rally up. You sold off, made a base, retested your high. You got a false break to the downside, and you have a series of higher lows to do what? Get on top of your trading range. This is where all the magic happens. If you fail to take out this high of 191, you can make a double top or a bearish pattern, and then you descend back into the trading range. You want to be above 168 to stay bullish. You start breaking down below 168. NVIDIA will turn bearish, okay? But right now, you're on top of the trading range, and you want to take out that fractal, get that Livermore pivot. So again, daily time frame, you're just kind of stuck on top of the trading range, bullish bias after a bullish run. You look at your canary, I mean, you're not overbought, you're still bullish, volume looks good. Momentum is, a lot of the Mag 7 are like this. I mean, you have momentum divergence. Yes, you do have bullish momentum here. You do have your SMO above your signal line, but when you look at it, it's starting to hinge. And look at the divergence, right? You got the divergence. Now, all this can correct, right? Obviously, if there's momentum in the market, it can take out the previous high, but until it does, it's divergent. And you look at your histogram to show you the strength of the move. I mean, that's a massive divergence from this, right? It's kind of meh. So you got people buying, but the main catalyst here is nobody's selling. Right? That's the big thing. That's why you don't have spikes in the VIX. Nobody's selling, and it's just fewer people buying. So you're getting the buying volume, but you don't have that momentum that you had on the big runs up. Could all change with earnings, could change with Powell, but I feel like the market needs some type of catalyst. You look at Apple, all-time high 260, you're at 257. You had a great ABC play out here. Right? A, B, C to the upside, hitting the fibs beautifully. Look at your 1618 at 239. Hit it right there, 239, came back down to 224, and then went bullish again, and now you're up at the 200%, 256, just below the 260. So you're looking at that, and again, could it keep going up? Sure. Can it also retrace some? Because we're going to look at some of these that have been retracing. But let's look at the indicators, see if they give us any pictures. You're overbought on the canary. You got volume, looks good. Your momentum, again, curling back down. You have momentum, clearly your bullish momentum, but again, it's just kind of waning here as we get closer towards mid-month, going towards end of the month. And you want to look at some of these that have been on these runs, if they can defeat key resistance or not. Because if you look, as you click through the Mag 7, you're seeing some different themes here, right? Some are selling off, some are stuck, some have had beautiful runs, big gap here on Google down at 215. You're at 250, right? 1618 at 250, 1732 at 257, that's your high. What happens if you don't take out 257? You get a classic M fractal, something like that. And then you want to try to hold a coil, right? You want to hold a coil, get a bias to break out one way or the other. If you do not hold this coil and you make a double top type structure, lose 239, then you're going to retrace. And that'd be looking down at that gap fill at 215. That's not where you're at right now. You're in chop. You're trying to establish a trading range. Watch that high there of 257, just below the all-time high. See what Google does as well here. Actually, that is the all-time high. See what Google does here as well. We look at the indicators on Google. You got way overbought on the canary, selling off this, pulling back is healthy. Volume's there. Momentum is bearish. This one's not even mid. It's just bearish. It flipped to the bearish side, so they're just losing steam. As you click through this on Amazon, important trend line here, obviously up off its low. And when you look at the trend line, right, you have your low, you have a higher low, you have a higher low, higher low. I mean, this is a bullish trend line, but market's going sideways. You're establishing a broad ranging coil here between that 239, 220. And now you want to look at this and look at where you are here in the trend, and you notice it's happening to all the Mag 7. You're getting money rotation. 242 is really what you want to flip to the upside. You can see you're kind of developing a wedge there if you look at those two lines, right? But if you look at this, look at your canary. You're down, you're not oversold. Volume's bearish, momentum's bearish, RSI's bearish. So it's all bearish, but you're holding an uptrend, okay? So again, it's nothing catastrophic here, but if you start breaking down below that low there, what is that, 211, 210? I think Amazon's in trouble. It'll probably come back down and fill that gap at 194 if it were to start breaking down. It can just as easily start regaining some momentum. So it's just chop. But it's important to see what these things are doing. You look at Tesla, beautiful W fractal, came right up to our target of 462, right? Been talking about this on the Discord. 462, you got just above it at 470. Remember, I shared that Tesla trade. I wonder if anybody's still in that trade. Down here in this accumulation zone. Great moves up in Tesla here. But 462, hit target. Can it go higher? Sure. What's the next level? 521. I don't see it going to 521 until we're actually getting the blow off top and you're getting peak euphoria. Momentum starting to curl over. Volume still looks bullish. Canary's still bullish, got overbought, so you're getting chopped right below resistance at 462. And you got a gap down here at 397, so you want to watch Tesla as it chops up and down here. If we look at Microsoft, again, classic three-wave move. Wave up, big rally, right? Look at that rally, big rally. Wave up, wave down, come back up. It's all about this. Can you take out that high, the all-time high? Wave up, wave down. Here you are at the 50% retracement. Above you, 618, 786 at 531 and 541 respectively. Watch and see if you get stuck in this zone. If you do, you could have a bias to potentially be making a double top. What you want to do is wave up, wave down, come back up, and hold that low, right? Maybe make some higher lows, form a trading range, and start seeing a bias. You saw this in gold, where you start getting some higher lows, some higher highs, potential breakout to the upside. If not, you want to watch that low at 492 to see if it starts breaking down. None of this is in danger of breaking down, right? I'm just talking about as this develops here through the course of the month. I want to watch these key resistance zones on the Mag 7. Look at Meta. Meta's been breaking down. Meta is about to get oversold on the Canary. Bearish volume, bearish momentum as well. So everything's bearish on Meta, but that can produce a bottom as well, right? So everything's bearish. You open this thing up. You're holding that fractal support at 691. You're bouncing off of it, so you can see a rebound. And again, this can help hold up the markets. You get Meta coming back up. It's down $100. 796 down to 691. It's down over $100, and you're trying to hold a trading range. If this is your base, then your top's going to be up here, and you want to see what you do here as you look at your indicators too. Remember, indicators lag except for volume, but right now you're still holding a higher low off of that, clearly a higher low off of your April sell-offs, right? So you still have this sideways range. Amazon's kind of up at an angle. You have Meta, nice double top here, gapping double top, right? M fractal, see that? Double top, breakdown, didn't clear this. You did break your midpoint so that you came down, but now you're just holding key support, so this can come back up as well. Watch as your indicators get oversold what Meta's doing. If it continues down, breaks through, or if it starts holding this range and coiling, could be something to trade on a breakout. If we look at Broadcom, range bound, this is a +1. So the Mag 7 plus Broadcom, 40% of the market weight, okay? So when you're looking at this, you're range bound 365, 322, and you're kind of mid. You're at 338 right now. Big euphoric ride up, rebound. This isn't anything. This is probably like at a 382 on a retracement from the all-time high here. But we'll see what this does. Maybe you get a little W pattern come up, or if you start breaking below 322, then be watching these gaps down there like 308, okay? But right now, it's just chopping sideways, which a lot of this stuff is. If we look at this from a Fibonacci, from the high, pull it down to the low, probably need a 382, 50%. Yeah, that's what you're doing. You hit the 382 at 343, 50% at 349. So it's just a weak rebound right now. It's still early. You look at Broadcom, you're at the midline in the Canary. Volume's bearish, momentum's bearish. Hence, you're trying to chop and hold a range. Let's look at Spider. Spider is at 671, and you know my Spider tops look the same as my market prediction tops, right? So for the S&P, 700, 750 for the Spider, and it's the same concept. Could you just grind up to 700 towards the end of the month, make a top, get some type of retracement, then go up to 750? Possible. I don't know, obviously, but let's just look at this. If we look at this from the same perspective, what targets we get here with Fibonacci, pull this down, right? So your February high, just like on the S&P, down to your April sell-off low. Look at my 1618, 69. I mean, it lines up with my market top max bull case as well. Back from earlier in the year, back from January, right? So you can see it, the symmetry in the market, 694, 744. And again, you're in the mid-range. So I just think you're going to have to retrace at some point to get a slingshot to go up higher. But we'll watch and wait and see what happens here. Look at our indicators here. You're getting overbought on the Canary. Good volume to the upside. Momentum still divergent from your peak over here in July. So you're still divergent on momentum. Momentum looks weak, but people keep buying and nobody's selling. If we zoom in some, go to like a 3 hour. See what we got here. Just a near-term range expansion. Go to this high. pull down to that low. 1618, 675. You're at just about 672 right now is above you. So you want to watch 675 if you take out your high here, which is 672. So watch 675 above that 680. See if you start turning around here. Look at the indicators on the 3 hour. Yeah, you got oversold or overbought here on the canary. But let's go ahead and continue. No downside threat as of yet in the indices or the spider. You really would have to take out about 667 to start looking at more downside here to the lower levels. But if we look at the Qs, similar concept, daily time frame, right? Near-term range expansion, 611 above use resistance, 617. And then if you look at the Qs this way, just like we did on the spider and on the indices, right? Let's go to your high here in February, down to your April low, 626, 679, right? So you're at 608.50. Do you just grind to it? Maybe. I still think you get that slingshot move. I feel like you need the slingshot move to really get up there and get peak euphoria in the market. So no danger of the Qs unless you start losing 602. Then it opens up that range from 602 to 588. But as you can see, you're pushing up, getting some doji candles on the daily time frame. Russell still has a triple top. Yes, the tops are subsequently higher. Just an overall pattern. I still see the Russell having this triple top eventually coming down. This is how triple tops typically play out. That's why it's a pattern. And then you break through on your fourth attempt, okay? So I'm still looking at this on the Russell. You're at 25.12, but again, it's just kind of meh, right? Just watching it with everything else. And yeah, I think that's it. So I'm going to do the crypto video next, and then I'll do the metal video after that. Hope you guys had a great weekend.